जिनिवाते दीनाम् अवित्रवतो.
Good morning, everyone.
Good morning.
As a common man, we always worry about our taxes, right?
Yes.
What will we pay? We are coming in what tax bracket? Yes or no?
Yes.
Yes. What is included in our income? What is excluded in our income? So just for easing out this, Income Tax Act has classified for the purpose of computation of total income all our incomes into 5 categories. First is income from salary, income from house property, profit and gains from business and profession, income from other sources, and capital gains. Today we are here to learn about income from salary. What do you understand by salary? Can I have the answer? Yeah. What do you want? Earnings of a month. Yeah. Much nearer to it. Can I put it like that? It is a periodical payment which a person receives for servicing, for rendering services to the person. Can I say that?
Yes.
That means, can I say that there has to be a relationship between the payer and payee as employer and employee?
Yes.
Yes. So there is a must for person to be considered under income from salary. Must criteria is employer and employee relationship. That means if a person can be former employer, a person can be present employer, person can be prospective employer. Employee also can be full-time employee or part-time employee. Yes. If a person is earning income from person who is not his employer, that will not be treated as salary. For example, let us take an example, remuneration to MP or MLA. MP, that is Member of Parliament, is not an employee of the government. So, that particular income is not considered as income from salary, but that is chargeable to tax under income from other sources. Similarly, remuneration to partners is not considered as income from salary, it is considered as income from business and profession. Okay? So next part what we are going to learn is about basis of charge. How it is going to be charged, how are we going to charge our salary income? There has to be certain criteria how it is to be charged. So this criteria is laid down under section 15. First criteria which they lay down is that salary income is charged on due or receipt basis whichever falls earlier. For example, let us say Mr. X earns an income from salary. He draws an advance salary of April 2014 in the month of March. He takes a salary in advance. Then in case that month salary, April 2014 month salary is chargeable in the previous year 13-14 and not in the previous year 14-15. On what basis? On receipt basis. This is what as section 15 says. His salary is to be charged to tax on due or receipt basis whichever falls earlier, whichever comes earlier. Second part is which considered as a crucial part for chargeability of salary is place of accrual. As we have learned about the residential status of a person, we know that foreign incomes are not chargeable in case of few individuals, that is not resident, not ordinary resident and non-resident. Here also, if we just repeat this, if an employee is an Indian citizen, employer is Government of India and services rendered outside India, his salary income is chargeable to tax in India but not his allowance and perquisites, because allowance and perquisites are exempted from tax. If a person is non-resident, employer is anyone other than Government of India, if services rendering outside India, salary is not taxable in India, neither his allowance and perquisites. If a person is resident and ordinary resident, employer is anywhere in the world, he is rendering service anywhere, his salary is taxable in India and also his allowance and perquisites are taxable in India. So So on this basis of charge, as per section 15, place of approval and due and receipt basis are the two criteria. On that basis, a person's salary income will be taken into consideration for purpose of computation of salary. Is it clear?
Yes.
Second part, what are we going to do? How are we going to perceive our salary as taxable income? It has three major components. Salary has three major components, which are income from salary, income from allowances, income from perquisites, and this all three, summation of all three gives us gross salary. And out of this gross salary, there are only two deductions which are available as per Income Tax Act, that are under section 16, entertainment allowance and professional tax. After deducting two deductions, we get net taxable salary. This is how we come towards income from salary under the category of income from salary, and summation of all the rest 5 heads of income, all the rest 4 heads of income gives us gross total income. And from this gross total income, we have total deduction under chapter 6A, which we will be doing it later on. Now let us look forward to income from salary, our first case in our computation of income from salary. Now the ruling section for income from salary are section 15 to section 17. We have come across section 15, that is basis of charge. Now we are going to come to the definition of salary under section 17 subsection 1. As per section 17 subsection 1, salary includes wages, annuity, pension, subject to some limits which are laid down under section 1010. Gratuity, subject to some limits which are laid down under section 1010. And fees, commission, perquisites, profit in lieu of salary, advance of salary, payment for period of leave not availed by leave, that is nothing but leave encashment, annual accretion at the credit of the employee in respect of the amount of recognized provident fund. This is nothing but interest what is credited to employees' provident fund, recognized provident fund, to the extent it is taxable. Interest rate up to 9.5 is not taxable, and over and above, if a person receives, that amount is taxable. Suppose for an example, if a person gets an interest of 10.5 on recognized provident fund, in that case, over and above is 1%, because up to 9.5% it is not taxable. Annual appreciation is nothing but interest. So 1% which is over and above 9.5% is taxable and is considered as a part of salary. Transferred balance in recognized provident fund. Transferred balance in recognized provident fund over and above the limit which is set up by the sections under section 10-12. As per the section 10-12, limit which is set down is 12% of salary. That means if a person, employer, is contributing over and above 12%, then that above limit is considered as a part of salary. For example, if employer is contributing 14%, then over and above is 2%, right? Then that 2% is considered as a part of salary. And the last one is contribution of employer to National Pension Scheme. Now, what is National Pension Scheme? It was in 1994. It came across after 1994. The pension schemes were shut down. In 2004, again, National Pension Scheme was re-corrupted by the government. In this case, what happens? If an employer, apart from the employee whose contribution is given to the pension scheme, employer is also supposed to contribute to National Pension Scheme. In that case, if employer is contributing to National Pension Scheme, then up to 10% of salary he can have an exemption up to 10% of salary. If he contributes over and above 10% of salary, that will be considered as a part of salary here. Now, how this exemption is claimed? It is first included that total amount of contribution to National Pension Scheme is included in the salary. Then we can claim the deduction of contribution to NPS under section 80 CCD. which is again a gross total income deduction under chapter 6A. Apart from the limit which has been set up under APCC, that is 1 lakh rupees. And apart from having 1 lakh limit, we can have an additional deduction of 10% of salary towards national pension scheme. Is it clear? To just brief up, salary includes wages, it includes pension, subject to the limits of section 1010A and subject to the limits of section 1013 for annuity. Then gratuity, subject to the limits of section 1010, exemption limits are set up for gratuity. Then we have fees, we have commission. Commission is also included in as a part of the salary. Then we have perquisites, which we are going to learn in elaborate form later on. Then we have profit in lieu of salary, which being a capital receipt, then too it is included in the part as a part of salary here as an exceptional rule. We have advance of salary, we have arrears of salary, then we have payment for period of leave credit not availed by him, leave encashment, that is leave at the credit of the employee at the end of the service, leave encashment subject to the limit set under section 1010 AA. Then we have annual accretion, that is nothing but interest which is credited to RPF. Then we have transferred balance in RPF, and the last one is contribution of employer to NPS. Did you understand this?
Yes.
Next part, in our computation of income from salary, we have considered first part, that is income from salary. Next part what we are going to consider is income by way of allowances. Now what are allowances? What are allowances? Apart from regular salary, a person receives additional benefit out of the job. That can be termed as allowances? Yes. And this allowances which a company or which an employer offers to an employee are taxable to a certain extent as to the limit set down. They will be taxable as per this expenditure. They may be giving some amount. It may be exempted up to certain limit, up to the amount which is spent out. So depending upon the scenario, we have certain allowances. Just an elaborated list. What we have HRA, that is house rent allowance. Under house rent allowance, exemption limits are set under section 1013A. What says section 1013A says? A person can claim house rent allowance exemption only if he resides in a rented premises. That means what? If a person lives in his own house, he cannot claim HRA exemption. Is it clear?
Yes.
Then what does it say? Means what will be the limit? Can we just say whatever we receive that will be exempted? No. What they say is there are certain limits which have to be followed as per section 13A. First limit what they say is 50% of the salary if a person resides in metropolitan city like Mumbai, Kolkata, Delhi and Chennai, or 40% of salary in the rest of the cities. First criteria is this. Second criteria is 50% of salary or 40% of salary. Second criteria is whatever HRA is received. And third criteria is rent paid less 10% of salary. Whichever is lower out of this amount can be claimed as an exemption. That means, for example, if a person is receiving as an HRA, let us say rupees 10,800 per annum, and if he is paying rent, is residing in a rented premises, his salary, let us say it is 24,000 in a year. 24,000. If that person is staying in Mumbai, 24,000 ka 50% comes to 12,000. He is receiving 10,800 as an HRA. Then we can say rent what he is paying might be certain amount as 30,000 what he is paying, or we can say as 5,000 what is 6,000 what he is paying as a rent. Then 10% of the salary comes to 24,000 into 10% comes to 2,400. So 6,000 less 2,400 gives me 3,600. Lower of the three amounts, that is 10,800. Then we have 3,600 and 12,000. Lower amount is exempted. How are we going to compute this? We are going to write HR what is received, less exempt, and the rest amount will be taxable. This covers sections 10, 13A covers our HR. Secondly, it is CCA. CCA is nothing but City Compensatory Allowance. It is fully taxable. Whatever we receive as CCA, that is City Compensatory Allowance, is fully taxable. Third is DNS allowance. It is fully taxable. Children Education Allowance. Exemption limits are set under special allowance, that is section 10(14). What does it say? The children education allowance which a person receives are exempted up to rupees 100 per month per child. Maximum up to 2 children. Fifth point is children's postal expenditure allowance. What does it say? The exemption limit is rupees 300 per month for 2 children up to rupees 300 per month up to 2 children, maximum up to 2 children. Next is LTC, leave travel concession, or we can say leave travel allowance. It is dealt in section 10 subsection 5. What this section 10 subsection 5 says, a person, an individual who is being employed, he receives as an LTA, he can have leave travel concession for 2 journeys in a block of 4 years. That journey should be within India. If he makes that leave travel outside India, he cannot claim allowance under exemption under section 10(5). This is what section 10(5) says. Next is fixed medical allowance. Fixed medical allowance which a company offers or which an employer offers to employee are fully taxable. No exemption limit is set for fixed medical allowance. Next part is conveyance allowance. It is fully taxable. Next is transport allowance. It is taxable up to the limit, it is exempted up to the limit of 800 per month for normal persons, 1600 per month for handicapped persons. Transport allowance and conveyance allowance are sometimes interchanged. There is a lot of difference between transport and conveyance allowance. Conveyance allowance is exempted up to the amount what is spent, and this allowance, transport allowance, is exempted only up to the limit which is set up under Income Tax Act, that is rupees 800 per month and 1600 per month for handicapped persons. Next is lunch allowance, fully taxable. Uniform washing allowance, exempted up to the amount spent. Then we have tiffin allowance, fully taxable. Various list of allowances which are taxable as per the rules of laid down under Income Tax Act. So in a gist we can say allowances, HRA, CCA is fully taxable, DA is fully taxable, children education allowance exempted up to certain limit, children postal expenditure allowance exempted up to certain limit, LTC exempted up to certain limit, fixed medical allowance fully taxable, conveyance allowance exempted up to certain limit, transport allowance exempted up to 800 rupees per month, lunch allowances fully taxable, uniform washing allowances exempted up to certain limit, tiffin allowances fully taxable. This summation of all the allowance will give me income from by way of allowances. So we have got 2 things, that is income from salary, and second part is income from allowances. Now the third criteria, what we are going to learn about this, income by way of perquisites. Now what is perquisite? As we say in a common man's language, perquisites, perks. How many perks you are getting, right? So a position, can I say it is a benefit which is attached to the position
Yes.
in that organization? If I don't work there, I won't receive that perquisites.
Yes.
Can I say that?
Yes.
So it is nothing but the benefit which is attached to the position of a job, which is being provided by the employer to the employee. Can we say it may be in cash or a kind?
Yes.
Yes?
Yes.
That is, purposes can be in a cash or a kind. Thirdly, can I say or put it across like that, कि purposes from a person other than the employer is not to be charged in the income from salary. Purposes which I don't receive from the employer
Yes. Yes.
should not be charged in an income from salary. Then where it should be charged? It can be charged under income from other source. It can be charged under income from business and profession. E.g. from BP, that is profit and gains from business and profession, depending upon the circumstances. To sum up, purposes are dealt in section 17, subsection 2. Now, what does this purpose depicts? How it is taxable? Usually, persons get so fumbled up. What are purposes? How are this to be considered? How it is to be considered as a taxable one or not taxable one? So, to sum up, we can categorize this into three broad categories. First, purposes which are fully taxable in the hands of all the employees. Second category, it is taxable only in the case of specified employees. And thirdly, purposes which are not taxable at all. Is it clear? So in three broad categories, these purposes are classified. First, fully taxable in the hands of all the employees. Secondly, in the hands of only specified employees. And thirdly, purposes not taxable at all. In the first case, if you just see this 1, 2, 4, 5, 6 and 7 what I have written, and this third one, it is not like that. It is read as 17 subsection 2 clause 1, 17 subsection 2 clause 2, 17 subsection 2 clause 3, then 4, 5, 6 and 7. This is how it is read. So what does purposes say under the category of fully taxable to all the employees? It says value of rent-free accommodation is fully taxable. Now what is value of rent-free accommodation? What we say? Value of rent-free accommodation, if an employee is providing you accommodation, is not taking any rent. They have their own premises and they are providing you accommodation. They are not charging a single penny for it. Then what are they giving? A rent-free accommodation to the employees, right? If you haven't been in that job, you would have received that particular place for accommodation, right? So this value of rent-free accommodation is taxable as perquisite. Now, how this value is deduced? It is based on certain criteria which are laid under Rule 3A. Next comes value of concession in rent. Suppose your employer is charging certain amount of rent to you. A concession is given to you in rent. Suppose in a similar locality, a rent which is charged is 24,000 per month. But your employer is just taking 10,000 from you. Why did he give that concession to you? Because you are an employee of that particular organization. The concession what you are receiving is nothing but the value of concession in the rent. It is taxable as perquisite and is considered as a part of salary. Third one is sum paid by the employee in respect of obligation which is to be paid by the employee. What does it mean? Employer pays on behalf of employee. Can I just quote an example of income tax? Income tax which as an employee on my income I am supposed to pay. But what does employer does? You don't pay. I pay on your behalf. Why you should pay that? Just as a perk he is giving that. Okay, I will be paying your income tax on your behalf. Is it clear? So that is nothing but sum which is paid by the employer in respect of obligation which is to be paid by the employer. Next one is sum payable to the effect and assurance, to effect and assurance of life. If I just quote it like that, a person wants to pay a premium on life insurance and he doesn't pay, employer pay instead of him, that will be considered as a taxable perquisite under section 17 subsection 2 clause 5. But I have written certain things, that is exceptions, RPF and superannuation fund. We are very well aware of this कि employer also contributes towards recognized provident fund. Yes?
Yes.
Can I charge that contribution of employer towards as perquisites? No. But is it falling under that definition? Is some payable to effect an assurance? What is provident fund? To assure you that after your retirement you will be getting this amount of money. Right? That is also an assurance. Then there is an exception to this rule, that is RPF and superannuation funds. Contribution of employer towards RPF and superannuation funds are not considered as perquisites because only over and above 12% it will be considered as a part of salary, and in case of superannuation fund up to 1 lakh it is exempted, over and above 1 lakh it is taxable. Suppose if an employer contributes 2 lakhs rupees to superannuation fund, then 1 lakh will be taxable. Up to 1 lakh it is exempted. So these are exception to this particular rule, that is sum payable to effect and assurance. Exceptions are RPF and superannuation fund. Next is value of security. You have seen nowadays to just hold back the labor or hold back the employees in the organization, many organizations are giving up options. ESOP, employee stock options, sweat equities, right? This sweat equities, this equity options which employer is giving to his employees to retain them at concessional rent or free of cost are considered as perquisites. Value of that securities is considered as perquisites. And the last one is value of FBT, fringe benefits. Small benefits which employer gives to the employee. Value of that are taxable in the case of all the employees. Example for FBT, interest-free loan. You need a loan, you go to your employer, he gives you fine, you take this money without any interest. Interest-free loan. That interest component, what you have received, is nothing but value of perquisites. Interest at concessional rate. Market rate is going on 15%. But this person is providing you at only 6%. That 9% concession what you receive is nothing but value of perquisites, which is taxable in the hands of all the employees. To sum up, fully taxable to all the employees, value of rent-free accommodation clause 1, clause 2 value of concession in rent, clause 4 sum paid by the employer in respect of obligation to be paid by the employee, clause 5 sum payable to the effect and assurance of life of the employee, clause 6 value of security, and clause 7 value of FBT. Now second category, that is in case of specified employees. Now what do you understand by specified employees? Anyone?
Board of directors.
Board of directors nahi. He should be an employee plus director of the organization. See, there are so many persons who are directors in various companies, but they need not be employee of that organization. The first criteria is employee should be the director of the organization. Second criteria is person should have voting power in the organization, 20% or more. And third criteria is gross total income or income of that person should be 50,000 or more. Monetary income of that person should be 50,000 or more. If any of this criteria is fitting up, that person is considered as specified employee. Addition to this perquisites, there are certain perquisites which are taxable only in the hands of specified employees. For example, service of sweeper, gardener, watchman is taxable only in the hands of specified employees, not in hands of other employees. Education facilities to family members of that person is taxable only in the hands of specified employees. Supply of gas, electricity, water supply in household not in office premises, in his household premises. That is taxable only in the hands of specified employees. Now, in practical utility, if we see, we won't find any person who is fetching less than 50,000 per annum. In practicality, if we see, this criteria is considered to be null and void, right? Because you won't find a single person here nowadays, at least now at present scenario, who is fetching less than 50,000 rupees per annum. So, mota moti we can say that every person is falling under this category. Yes?
Yes.
And the last one is purposes which are not taxable at all. 3 categories, 2 categories done, and third one is purposes which are not taxable at all. Under this, first comes telephone which is provided, telephone service which is provided, or telephone bill which is paid by the employer for the connection at the residence of employee, not taxable. Goods at concessional rate. Sometimes employer provides to employees goods at concessional rate. That is also not taxable. Third one is employer's contribution to staff group insurance. Nowadays the concept has come of staff group insurance, complete group insurance in an organization. That is also not taxable. Gift voucher or gift in kind up to the rupees 5,000 is not taxable. Beyond 5,000, it is taxable. Up to 5,000, it is not taxable. It is exempted. Recreation facilities, rehabilitation facilities, refreshments in the office, then training programs for the employees, for the benefits of employees, all this are not taxable. And the last one is medical facilities. Medical facilities has a bigger ambit which is to be considered. First one, medical facilities in a hospital owned by the employer, in any other hospital. If medical facilities provided for the treatment of the employee in the hospital which is owned by the employer, fully exempt, not taxable at all. In other hospital, private hospital, whether that facility is provided in India, outside India. In India, private hospital, it should be conformed with Commissioner of IT. In government hospital, fully exempted. Outside India, there are again 2 categories. If a person is having gross total income of less than 2 lakhs, then it is exempted on the basis of prescribed limits. Those limits are, it should be sanctioned by RBI. Second, only one patient, one attendant expenditure are to be borne. Stay and travel and medical treatment expenditure, whatever are there, should be sanctioned by RBI, and that amount can be claimed as an exemption. That amount will not be taxable. But if a person is having gross total income more than 2 lakhs, then it is fully taxable. Apart from this medical facilities, under hospital owned by R, a person reimburses medical bills for medical treatment of himself and his relatives. Up to rupees 15,000 are exempted. Secondly, person may pay, employer may pay premium on Mediclaim insurance. That is also exempted. That is also not taxable. And apart from this, any allowances, purposes to High Court judges, Supreme Court judges, UNO employees are totally exempted. So in the nutshell, we can classify purposes into 3 categories: fully taxable, taxable only in the case of specified employees, and third is not taxable at all. Is it clear?
Yes.
And all these computations and summation will give me gross salary. Apart from this, we have learned that profit in lieu of salary is also considered as a part of salary. Now, what is profit in lieu of salary? Profit in lieu of salary, in addition to salary income, what I am receiving as in capital receipt are considered as a part of salary. In what cases am I going to receive profit in lieu of salary? First, at the time of retirement, or at the time of termination of service, compulsory termination of service, any compensation which I am receiving at the time of termination of service for modification of any terms and conditions, or in relation to any e-man insurance policy, or we can say under unrecognized provident fund. Employer's contribution under unrecognized provident fund, interest of that particular part is considered as profit in lieu of salary. This all comprises of profit in lieu of salary, which is also part and parcel of this computation. All the summation of all these three will give me gross salary. Out of this gross salary, we are just allowed two deductions. Whatever I spend on my personal expenses, household expenses, I have purchased some certain books for exhibition, are not at all allowed as deduction. What is allowed as deduction is depicted under section 16, clause 2. Entertainment allowance. This allowance is exempted only in case of government employees. And limits for this is least of 1/5 of salary, that is basic salary, secondly amount what is received, and third is rupees 5,000. First we add this entertainment allowance in the category of allowance, and then we claim this deduction under 16 subsection 2. Is it clear?
Yes.
The least of the amount, that is 1/5 of basic, whatever I receive, or rupees 5,000, whichever is lesser, I will take it as deduction. And the second component of deduction is professional tax. Professional tax is nothing but tax which is levied by state legislature. And this tax, as per Maharashtra, is 2,500. Maximum limit is 2,500. And it can be used as a deduction only if it is paid. Payable, outstanding is there, we can't claim the deduction. Only if professional tax is paid up to the amount of 2,500 is claimed as deduction. Is it clear?
Yes.
So, for computation of income from salary, we have income from salary, income by way of allowance, income by way of work visits, gross salary, less deduction entertainment allowance, professional tax will give me net taxable salary. Apart from this, there are certain exemptions. These are a small list what constitutes our salary, what is coming under the domain of salary. Apart from this, there are certain exemptions. Exemption as related to gratuity under section 1010, exemption as related to pension under section 1010A, exemption under section 1010 AA leave encashment, exemption under 1013 annuity, exemption under 1011 statutory provident fund, 1012 recognized provident fund, section 1013 superannuation fund or annuity we can say, section 1018 we can say pension to guarantee award winners. There is list of exemption which have to be considered for computation of salary. Did you understand this?
Yes.
Thank you.